following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 29th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon, 877-927-6648. Of course, if you can't pick up the phone and dial in, you can always send me an email at steve@tfnn.com. And inside, just put in the subject heading, put radio show question, just as Kay did here a short time ago. So we're going to get to her question. And, of course, you can always send me a ping, an instant message inside of the Tiger's Den, just as Danny did just a short time ago. So let's go ahead and get this show kick-started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up or trading down. 12 points, 22,368. S&P's up nearly 8 points, trading at 25.17. NASDAQ trading up 46 or 0.8% to the upside, 59.80. That's the NDX 100. Russell 2000 up 4. Semis are up 11, another 1%. New York Stock Exchange up 22. NASDAQ Composite up 0.7%. The Wilshire up 0.3%. Everything to the upside. The transports, those are trading higher as well. You've got the VIX index that is trading just slightly higher out there. Gold is off $2. Leading the charge here to the upside. Bluebird, well, no. I take that back. I have to shut my system down and turn it back on again. So I'm not gonna give you who's leading to the upside or the downside, not during this segment here, but that's okay because we already have questions that have come in. And we need to take a look at those. The first one came in earlier from Ron, and Ron wanted to take a look at Aetna. He's in some call positions, and the real question was, where is it that we see Aetna headed to? So, Ron, we'll take a look at a couple of different charts out here. This is the daily time frame chart that you and I are looking at as we speak right now. Here's what we know with regard to its market profiles. Now, on this screen, we have both daily and weekly. So you can take a look, you take a snapshot picture of the bottom portion of my screen out here. It's going to say top, center, bottom, W. That's for the weekly. And then just top, center, bottom. That's the daily in blue. So the positive with regard to your call position inside of Aetna is it has cleared yesterday the top of its daily box. Now, that box, quite frankly, was equally distributed, so there was no bullish or bearish bias to it. Nonetheless, when you get over resistance, old resistance should become new support. So what's the level to the downside you're watching? 156.70. Where is Aetna likely headed to? 160.29. Now, 160.29 is the top of its weekly box. Doesn't mean it can't get over it. But right now, that is your resistance level out here. I think that's somewhat in line with what you were taking a look at. Now, the downdraft that this had, nice wide-ranging bar with volume on September 19th, was with 3.1 million shares to the downside. You're going up with 904,000 shares as of 110. We could double it. Maybe it's going to be 1.8, 1.6, 1.7, somewhere right around there. So you're coming into a potential resistance zone just simply from a volume standpoint. Doesn't mean it can't get back up to the highs, but if I were you, based on the way that you're trading this, I would be looking at that 160.29 level. Now, that's what the daily time frame chart is showing. What could change that picture out here? And I think each of us have to take a look at individual stocks and pose that question to us in light of the potential of tax reform out here. Now, in the case of Aetna, if we take a look at it, this is Stevie's chart. This is going to give us a pretty reasonable estimation of what the current tax rate is. So if we take a look at the effective tax rate for Aetna, it's 39.87% out there. So it stands to reason. Now, we haven't dive in. We didn't do any of that type of, I don't know how much of that, what portion of that is state or city or any type of international or whatever it might be out there. Aetna, I'm not sure if Aetna's got international exposure or not. But nonetheless, on average, you've got a 40% exposure out here. And simply, it should benefit from tax legislation, should it go through out here. And that means that, hey, maybe the 160.29 round could be taken out. If we look at the monthly chart out here, here's one thing that you and I know, and that is that last month, the month of August, it formed a Tom Mark TD sequential 13 count. Kind of hard to see on my screen out here, but trust me, it is out there. Now, that alone is not necessarily, it's a potential topping signal. In this case here, price would have to close below the bar 4 months ago. We're not dealing with that right now. At a minimum, have to get below Stevie's red line, 149.56 as we speak. But what you know on a monthly basis, price moving higher, doing less relative energy out there. It's not a bad thing. It's just not the greatest. You like to see things move higher with energy. If I take a quick peek and see where we're at in the wave count zone out here in that fourth wave to the upside. So it says, caution prevails in your call position. I still think that top, that 160 level is what you'd be looking for. If I look at the weekly time frame chart for Aetna, here you see this does have a confirmed price relative strength divergent pattern. Now, these patterns are very cool because they're very helpful at highs out here. And you can see price was moving higher. This is in the week of September 15th. Last week, big wide-ranging bar to the downside. That gave you your three-river evening star. Now what's occurring on a weekly basis, price is trying to get up to the 160.29 level, Stevie's red line. So 160 has popped up now twice out here. That's where the counter trend rally. Well, how about that? Is that really 160.29 and 160.29? No, it's 161. I was picking up the TAS profile. 161.32. So your range, 160.29 to 161.32. Didn't think the math would work out like that. So, Ron, I hope that assists you. Now, from a timing standpoint, look, you're coming into window dressing time period next week. There's no reason for price not to be able to get up to that level. I might change my position on that if you see it close back below 156.70. So I hope that helps you out. If not, let me know. Please let me know what additional information I can provide for you. We had Kay write in by email just before we came on the air, and Kay is saying, "Hi, Steve. I'm short the Russell 2000 at 1494 for just a day trade. Can you give your support and resistance levels? Thinking if it breaks 1490, then it should head to 1483. So, okay, when we come back from this break, let's go take a look at the Russell 2000. We'll take a look at the support and or resistance lines. We'll take a look at the TF, which has a 10-minute delay on it, but I can give you those numbers that you're looking for. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So for Kay, who is short the Russell 2000, just for a day trade out here. First thing that we're going to take a look at with regard to levels that you should be watching, since it's a day trade, more of the focus really on the intraday and the short-term charts. And as we came on the air, Kay, you did have a brand new 30-minute TAS market profile that formed. And 1493.86, so 1494 should be your resistance zone. If you see price close above that level on a 30-minute basis, probably best to exit that trade, because the box that currently has formed on a 30-minute basis has a bearish structure to it. And what we mean by that, if we go ahead and turn price off, let me do that. It's going to be a little bit easier to see. You look at the very left-hand panel out here. You're going to see that in this new box, this little cyan-colored line, much closer to the top. It's a widespread box out here on a 30-minute basis. And so since the center of the box closer to the top, in the bottom, by the way, is 1489. That was another number that you were looking for. Sellers should be in control of this area. So if sellers are not in control of this brand new bearish structured box, that would be a close on a 30-minute basis above 1494. To me, that would suggest that you are on the wrong side of the trade and just simply go ahead and cut your losses. To the downside, you're looking at a support level of between 1492 and 1489. 1491, so all these are the numbers that are showing up on my screen. The bottom of the box on the 30-minute is at 1489. The top of the 60-minute is 1492. The top of the 240-minute is 1491. So it looks to me like that would be the levels that I would be watching up. Let's switch over for you and take a look at the 30-minute chart here that's got Stevie's red line on it. See if we can identify any type of topping patterns. Other than that, you had a nice little bearish engulfing on that last candle out here. That's really about it. Price is trading right at about Stevie's red line as we speak right now. So that price point, well, I can tell you what it is as soon as I pull up the data box, as soon as I get my cursor out here. So what you're really looking for between the profile that we just had formed on a 30-minute basis, you really want to see price get below 1493. Right now, all that's really taking place is support is being tested out here. Again, I have a 10-minute delay on this, so hopefully I imagine you're looking at the live screen out here. So below 1493 gives you that opportunity to get down to that 1489 level. So thanks for writing in. Best of luck to you on that trade. That being short, the Russell 2000. Now, Danny in Atlanta wants to go take a look at platinum out here. And so we are taking a look at the January contract for platinum. Danny is trying to find a bottom out here. And as we take a look at these screenshots, these being 60, 240 daily and weekly time frames, 60-minute below all bottoms of profiles, same on the 240, same on the daily. So you're really not seeing any type. You're seeing only bearish signals out here. Says that lower price is still coming at us. Really, on a weekly chart, man, we have had 1, 2, 3 wide-ranging bars to the downside out here. Unfortunately, because it's the January contract, we're not going to get a lot of data out of this to provide us with information. So let's switch over to, at this stage of the game, the continuous contract out here. Let's ignore the profile levels that are on here. This is the weekly chart. And, you know, what I can say is that in this 880-ish area, where you can see back on the trading week of December 2nd, 2016, you had the bull show up, little bull show go off, and really two of them, so to speak. So it's about the 890-ish area. So we know where buyers are lined up with regard to platinum, where they believe there's value in a price area. Same thing occurred between the week of May 5th and May 19th, 2017. You had a nice little three-river morning star. You had a little hammer candle that formed, somewhat failed, but it had backup with regard to where the bulls were at. That was the week of June 30th out here. So I would say if you're looking up, so this suggests to me the 890-ish area, you're at 920 right now, 885, somewhere 887, somewhere right around there. Maybe that's the place to be looking at. And what you want to do is take a look at some shorter-term time frame to see if you can find some type of turn out there. So that's what the continuous contract is suggesting. On platinum here, I go to a 15-minute chart just for blanks and giggles. You know what I'm referring to there. You'll see that too has red shoots, right? So it's even below profiles out there. So don't be looking for platinum to form a bottom, at least not as of 1:23 in the afternoon. And Danny, I hope that that helps you out. I think we have been searching for bottoms there for quite a while. All right, so we've covered that. I see another question has come in out here. You're welcome. Says, please bisect the New York Stock Exchange rallies, New York Stock Exchange, and the U.S. New York. So let's take a look at that. So for the NYSE. Let's do this. I don't want to sound exasperated. I'm not exasperated. I'm just taking a deep breath out here. I've been running a little behind. It's not little. That's the unfortunate thing. All right, so good news about the New York Stock Exchange. You're up at a brand new all-time high. You're not up at just a new all-time high with regard to price. You're up at a brand new all-time high with regard to its advanced decline line, panel 2. You're up at a brand new all-time high with regard to its volume summation index. Those are all bullish. There's not a divergent pattern that exists inside the New York Stock Exchange. New York Stock Exchange is communicating to you and I, if we take a look at it as a whole, which includes closed-end bond funds, the whole 9 yards out there, still looks positive. What is interesting, though, about this, with regard to the advanced decline data, is the advanced decline oscillator, that which is taking a look at the difference between the 39 and 19-day exponential moving averages of that data, still has not been able to get up to the plus 150 zone or above plus 150. For me, that's a little bit troublesome because therein lies a bit of a divergence out here. To show that to you in greater detail, what I would have to do is turn off a couple of these things. So I will, just for the heck of it. There goes the advanced decline line. Let's go get rid of that volume summation index. Let's go ahead and blow this thing up out here. And so this is the caution sign. It's not a sell signal. It is a non-confirming signal. And that non-confirming signal does it's a good one, by the way. And when I say it's a good one, it is one that you pay attention to because it does help you to identify short-term bottoms out here. That's a good thing. It's a good, short-term tops, I should say. You know what I was really trying to say out there, but if you didn't, I just corrected that. See where you have this little divergence where you've got the advanced decline oscillator making, in essence, a divergence by having lower highs out here, whereas price has been moving to higher ground. All you need to do is just extend this out here. So it is something to pay attention to. It says, hey, Steve-O, a short-term top could be forming inside of the New York Stock Exchange. Now let's go switch over and take a look at the actual daily chart, utilizing Stevie's other tools, tricks of the trade out here, and let's go take a look at it. Here's another thing that we know. Let me update this. Looks like price. No, I take that. Well, let me just check on one thing out here. Where is it? Let me check on one thing. Make sure I've got this setting. I do. Man. You're just in leg 6. There's actually, other than that divergent pattern, this is a chart of beautyism to it. New York Stock Exchange still wants to motor to higher highs. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 14, S&P's up 7, NASDAQ 100 up 41 points out here. In further take a look at the New York Stock Exchange, the top 100 U.S. issues here. This happens to be the weekly time frame chart. So as we end the week, it's apropos that we take a look at it. It is also moving higher, doing less relative energy out there. So we've got that pattern. We did not have that on the New York Stock Exchange on the daily time frame chart out here. Not a problem. Not a problem unless the bears show up and give you some type of bearish reversal signal. And then still not a problem until you see it close below Stevie's red line, 96.70 as we speak right now. That's the weekly time frame chart. Just for the heck of it, since we're closing out the month, let's see what the monthly time frame chart looks like here. That's a sign of beauty. You can see how Stevie's red line was tested during the month, held as support. Let's go take a look at the daily time frame chart out here. And on the monthly, we had a Tom to Mark 9 setup out there from a monthly standpoint. Prices above that, as we can see also on the daily time frame. Yet on the daily time frame, price moving higher, doing less relative energy. But not until you see a close below Stevie's red line will there be any kind of potential problem in the 100 top U.S. 100 issues inside the New York Stock Exchange. 9767 is Stevie's red line number out there. So it's mighty darn tootin', good looking good out here for the New York Stock Exchange. Just as long as we're in the we were in the monthly time frame charts. Let's go check out a few of those monthly time frames out here. Let's go take a look at the transports. Why not? Dow Jones Transports going to finish off the month at a new all-time high, the week at a new all-time high, the daily at a new all-time high out here. If we're looking, it's above resistance. You can see where the sellers came in the month of March and then the month of July out here. That sets up as resistance, typically, is the high of that session. We're above the high. The old high should become new resistance, so the old resistance line should become new support, is really what I should have said. 97.63.66. You're at 99.17. As go the transports, so goes the Dow. If we go take a look at the Dow and see what's going on inside of it, it's been struggling just a tad, but we look at the monthly basis, no such struggle exists. Now, this month, the month of September, is going to be a TD 9-count setup. There can be that can be a location where you see some type of short-term change in trend. Last time we had a TD 9-count out there was the month of February back in 2015. That, in fact, did lead to a decline. Not saying it's going to this time. If it does, though, price will take out Stevie's red line. That's 21,494. You're at 22,370 as we speak right now. Let's take a look at, the struggling indice. That would be, I suppose, the NDX 100. If we take a look at it, see what kind of monthly message it provides to you and I. Is that the look of a bottom or top? Is it? Is it? Not even close. Not even close. No cigar-rooney out here when we take a look at the monthly chart for the NDX 100. And the response, quite frankly, the pattern that is set up in the NDX 100 during this unfavorable seasonal cycle is mighty darn bullish out here. The last time that I saw this pattern on a monthly basis inside the NASDAQ 100 was back before it zoomed off to its highs in 2000. Made the exact same type of pattern candle-wise on a monthly basis to what we're looking at inside the NDX for the July, August, and now September timeframe out here. So that looks mighty, mighty good. Different than what the daily chart shows, I think. However, what you can see inside the daily chart is today. As long as price closes above 59.60.74, it has resumed that first position, or at least that leading position, because price now is above Stevie's red line. It turns that price oscillator up on the very bottom panel of our screen. Don't pay attention to those TAS market profiles on this chart. They're not actually helping us. They're not valid with regard to resistance zones out here on this chart. But it does say to you and I that the NDX 100 wants to head back to the high. Say, we're coming into the beginning of the month. Fund buying out here makes all the sense in the world to me. So, look, if you're short these vehicles, God bless you. Not because you just sneezed, but because you're about to get a cold, I think. But just keep those stops in place out there. And if you see it bust through the highs out here, well, you'll have the information you were looking for. It's headed to higher ground. When it comes to that NASDAQ 100, one of the charts that you and I looked at, I think might have been early in the week out here. Let's go try to find it. One of those divergent charts out here where what we looked at was the equal weighted ETFs. I'm sorry, the equal weighted ETF for the NASDAQ as well as the S&P 500. I'm proving that I cannot do two things at one time, which is speak and look for a chart. Just kidding you. Up comes the chart. And as we take a look at it, here's one of the patterns that we were taking a look at, which was that the equal weighted ETF, QQEW, that is the First Trust NASDAQ 100 equal weighted ETF out here, it was making a higher low. In other words, I was looking at the swing point on a closing basis, September 8th, versus that swing point from September 26th. Unlike the NASDAQ 100, which was making lower lows. This is the most important point. The one that is communicating the most information to you is the equal weighted ETF, always. When that's making new highs, there's only one place for the weighted ETF to eventually get to. Because the one that is showing you the true move, it is the equal weight. And as we speak right now, 1:36 in the afternoon, it's trading at 55.53. It's trading at a new all-time high. And if it closes that way, you've really got to ask yourself, why am I staying short the NASDAQ 100? Be careful out there. Be careful. Now, don't believe me. Just simply go back and take a look at the equal-weighted ETF and identify for yourself how often it's wrong when it's leading the charge out here. It does happen. It does happen. Just not too often. So watch that, QQEW. You can do the same kind of thing inside the S&P 500. Inside the S&P 500, you get to look at my favorite equal-weighted ETF. That's the Guggenheim S&P 500. That is the RSP, which, by the way, as we speak right now, new all-time high. So for those that are out there saying this market is in trouble, it's not. It looks healthy. You want to buy the next pullback. You want to buy that next dip. In fact, you probably want to buy that next dip. Well, you want to buy that next dip through the middle of October, maybe beyond out there. You just have to tune back in, check into the radio show, ask me a question, subscribe to my newsletter service, any of those things out here. But, you know, folks, all I can tell you is that you just go back and look at it. Go compare RSP, set on a closing line basis. Go compare that to the SPY and just go find out how often is it that the equal weighted makes a new all-time high when the SPY hasn't. We don't have that, by the way, in this case out here. But just try to go find those times and find out for me, how often is it that the SPY is the one that in the game of liar's poker, or sometimes people call it BS poker, before Steve. Now you've got all the information you need in order to track the Qs and the SPYs. C. Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, I'm going to go out on a limb here. I'm going to tell you, like Karnak would, that I see a pizza in the very near future for Tom, and probably Tom and Tommy. I think they're both up in Boston, or I'm not sure if Tom's here or on his way up or what have you. But I see a Regina's Pizza and some goop in his future out there. Now, that's not a stretch. Hey, Bob in Colorado, he writes in and says, Steve, could you give me your take on Mosaic, MOS, the ticker symbol, for a long entry, looking to hold for 1 to 12 weeks? Thanks, Bob from Colorado. So, Bob, as we take a look at the Mosaic chart out here, 3 different time frames. Daily is on the left. Center is the weekly. The monthly is on the very right-hand side. So if you want a buy point, the very first buy point number, well, there will be a couple that I'll provide to you if I can. The very first buy point is going to be the bottom of its brand new daily box. You had a daily box form today. It's neither bullish nor bearish, so I don't know if price will pull back there. If it did, that would be your first entry point, would be 2080. If price, in fact, closes above 2154, it says that price wants to continue running higher. It's above the weekly TAS market profile. That's what it's doing this week. That number was 2114. That could also be a buy area, 2114. Old resistance should become new support out there. So you've got 2080, 2114 as the numbers out here. Monthly is not providing us with much information. That's what market profile charts show us. But that's not. We don't stop there because we've got more. If we go take a look at more, take a look at the daily chart out here, your buy point, that happened several weeks ago. Now, that just simply utilizing that wonderful 7th wave move. So on a daily basis, if you take the swing point high from July the 20th and you start doing your wave counts down to the bottom or down to a low, what you're going to see, and I don't know how this works, I just know that it works enough that you just pay attention to it. Why? I don't know. I just know that it does. And then you take a look at the day of September 8th. September 8th was the bottom. September 8th was one of those 7th wave moves to the downside. That is this chart singing in the Stevie Wonder key of G as you take a look at it. You're only in wave number 3 to the upside, but the problem that you have in your near future, potential problem, is that we can see that the price oscillator in the very bottom portion of our screen is starting to near the 0 level. I can't tell you what price it's going to be when that happens. I can't tell you what day it is at when that's going to occur. I just know that it is likely to occur. And when it occurs, we should see a stalling of price. Not only should we see a stalling of price, we should see Stevie's red line and price connect with each other. For the 1 to 12 month period of time, since you've really missed the actual buying opportunity, Bob, I'm going to say just sit patient. Let this price oscillator get up to zero. Wait for price to come back and test and then reject Stevie's red line, meaning you don't want to see it close back below Stevie's red line, because if it does that, then the run in Mosaic is over. Kaput, adios, done, zippo, no more. Any of those possibilities out here, because what you don't want to see is a falling price oscillator below zero. What you do want to see in order for Mosaic to continue to move higher is a rising price oscillator above zero. That's what occurs when we see that bottom portion of the screen get to the zero line and then a test of Stevie's red line. That's where it releases a ton of information for you. No, I'm not saying you can't chase this. You are the trader out there. I can just provide you with the information that I have at my fingertips. I can easily make the case for you that on the reward side of this trade right now, you're looking at 24.37 is where price ought to be able to get back to. And that's going to be where that seventh wave move began. And that's the July 20th level. Now, that's the daily time frame chart out here. If we go put the weekly, just for the heck of it, because you're talking about longer term, do we see any kind of real pattern out here that formed? It suggests that this could be a major bottom. If we go take a look at its wave counts to the downside, oh my goodness, you had a seventh wave move on the weekly chart. So that says, hey, Bob, you might be onto something here. I wish we would have had that price relative strength divergent pattern. We didn't. But what we know is you had wave number 7 to the downside. That's a beautiful thing. On a weekly basis, you're closing right now. It looks like you're going to close above the TAS weekly profile high at 21.14. So that's a short-term positive. But I still go with the fact that you want to look at this as a possible 3-month hold, 2-month hold, maybe 4-month hold out there. Be more patient. Wait to see if we get that testing of Stevie's red line and price as that price oscillator gets to the zero level. Thanks for writing in, and best of luck with you on that trade. It's always so much easier when you guys send in, guys and gals, and you're welcome, Kay. Send in requests out there, because then the show is really designed around what it is that you need information on, or at least another set of eyes to take a look at it. Now, for example, we've got Tim-son. Has sent in a message here, and Tim-san is looking for Zion, Z-I-O-N as an entry. I missed my entry at 46.05 Wednesday. Is it too late to go in at this point? So let's go take a look at that. Z-I-O-N, and that is for Tim out here. Zion, yeah, missed the bull. Now, you know what? This is a bit of a runaway little train here. Let me do some wave counting. Only in this third wave to the upside. We're going to have to. So, you know, we're going to go take a look at a different chart for you, the daily time frame chart that we're looking at, Tim. So this is trading into the swing point out here from March the 1st. I'm going to guess by looking at that, because it was a gap to the upside, it's a high volume daily swing point, but I don't know that for sure. It's just a feel that I have. Let's go see if it was a good feel or not, because I didn't have price on our volume on the other chart out here. Let's go ahead and explode this out. And the answer is, nah. It was just 3.3 million shares out there. Well, sort of right. Okay, 3.3 million shares today, 1.1 million shares. So you're into that swing point. I don't think you want to jump down this train here just yet, Tim. You want to. It's going to go test the high. It's not worth or should go test the high, 48.33 out there. I don't want you to think I know what the Sam heck I'm talking about and can guarantee the results out here. But the probability suggests that it's going to go test the high, 48.33. Maybe it tests it, rejects it, and then pulls back. Would you take that as a short? Heck no, not on your life. Instead, what I would wait is to see if price could pull back in and test Stevie's red line. That'd be one spot 45. 46 or so is a level that I'd be looking for at this stage. Is there an A to B equals CD to the upside in its future? Well, the B point that it did take out was 2.3 million shares August the 8th, and you're only at 1.1 million shares today. So you're taking out as two swings. You're taking out one swing with light volume. You're taking out a B point with light volume. So be patient on this out here, Tim. That is what I would say. And I enjoy the fact that you listen to the show out there. So thanks so much for listening. I'm sending this again because I forgot to put the subject. No, we're good. We're good. I got it. Okay. As I say, it's always best to always, for me, it's always more fun when you folks send in requests, or even inside the Tiger's Den, because again, we're using this hour for extremely valuable time, which is to assist you with another set of eyes as to what you are looking at out there. Steve, what are your Bollinger Bands and EMA saying about the VIX today? Dano, well, I don't use the Bollinger Bands on or really the EMAs. Oh, about the VIX. Oh, about the VIX. I don't know. I thought I was reading GLD and GDX on the upside. So you're absolutely right. And you're asking for what is it telling me today? Without even looking, I'm going to go out on a limb. And it's telling me that there's a short-term top that could form. That's what it's telling me. But let's go take a look at it, because I could be all washed up. Steve Rhodes with TFNN. We'll be back for that last 2-minute segment. Dow's off 18, S&P's up 6.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So for Dano, we wanted to take a look at he asked about the Bollinger Band readings out here. And Dano, just use the 50-1 for your settings. You're going to come up with the same results that I'm taking a look at out here. And here is here's the thought process. When you get down to the bottom of that Bollinger Band, that is where short-term market tops can form. out here. And all that you and I are really looking for at this stage of the game is some type of short-term market tops. All the other tools, indicators, everything that we've looked at out here says unless this time is going to be different, and I'm talking about different going back to 1865 or something along those lines, there's no major top that's in place. Don't buy into that crap. Just don't buy into it. Don't let anybody sell you that bill of goods out there. It's not in the cards. It's not in your cards out here. But what happens is when that spot volatility index gets down to the bottom of that band, that's where you start to take a look at where those short-term tops can form. The bottom, or the top chart on my screen out here is the spot volatility index. The bottom is the S&P 500. You can see back here during this time frame, give me the pointer, right around the July 21st area out here is when the spot volatility index was last down at the bottom of that Bollinger Band, even on the trading day out here of August 9th. And you can see that's where these little short-term tops inside the S&P form. Now, when we take a look at that bottom panel of our screen, Dano, we know that we are in wave number 6 to the upside inside the S&P. So makes sense to me that coming into fund buying, we're going to see some type of seventh wave form. It's not going to be Monday. Earliest it could be Tuesday, maybe it's Wednesday, maybe it's Thursday, but more likely, so try to put a couple of different tools together and to look for. That's not the only two tools that I'd be looking for, but that you asked me the question, what's the message of the spot volatility index and the Bollinger Bands, and that is the message that is out there. So I don't hear music in my ears, but I know that it's coming soon to a theater near you. We've covered all of your questions. Thanks so much for, I guess we didn't get to the GDX and gold. Doesn't look good. Whoever asked me that question, gold's still going lower. The GDX is still going lower. But folks, have a terrific weekend. Fantastic, fabulous weekend. We'll see you on Magnificent and Marvelous, Magical Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.